Hey traders, it's Leaf West. I thought I'd do a couple videos on the trend tracking software and the color coded candles that it's printing, just to give you a more up-to-date sense as to how I read those color coding candles. The first one I'm getting a lot of questions on is just the light blue and dark blue extreme candles. Again, light blue is indicating an extreme measure in price relative to its average true range. You get that when price makes a violent move away from the price range that it's been trading. And the dark blue is a measure of trend strength, and the trend strength getting to a point which historically has proven to be unsustainable. So you'll get dark blue candles at points in time when prices trended strongly for a long period of time, and that historically it doesn't normally go much beyond that. So you get some kind of counter trend move, whether it be a consolidation or a reversal or what have you. The stock I have here is a 3-minute chart for Intuitive Surgical ISRG from January 20th, Friday. And I'm not sure what happened, whether it was an earnings result or a change in a forecast, but the stock opened up, it opened the day down about $30. So here you had a stock that was in a nice sort of tight not a contraction period, but a nice tight sort of trading range, and then you get a violent move. So these light blue candles show you, in essence, that kickoff. And if you look at the histogram, you can see the kickoff happened well below the 100 level on the trend strength indicator. So it really was a warning for people to expect more price action in that direction. So my reading of when you get these kickoffs is that they're telling you that you've got a kickoff to a bigger move. So if you can get into it early, I think there is an argument to be made that you should buy at least a partial position to play the continuation of that price extreme, because you don't know how long it can go. But again, because you don't know how long it can go, I think you have to be careful on how big a position you get, because they won't all. I'll show you examples, but they won't always give you like how many candles there's. Let's see, how many candles? 129 to 115. So you had 14 candles here of price extreme before price really hit a bottom. And the priority of my color coded candles is that price extreme, the light blue, overrides all other colors. So even though you can see right at this point, right here, actually trend strength broke the 100 on the histogram, which is where the dark blue candles start getting printed. It wasn't until this point here where you no longer are at a price extreme. Again, the price extreme is just measured relative to an average true range calculation, relative to the current price. So eventually the average true range will catch up to any expansion of price. So eventually you go from light blue to dark blue, or from light blue to a green. In this case, you went from light blue to dark blue because you still had a trend extreme. And what I've found is that that light blue to dark blue really is a signal that your expansion of trend or price in that direction is going to come to an end relatively shortly, and to expect some kind of counter trend consolidation, bounce, what have you. And in the case for ISRG on Friday the 20th, price bounced pretty good. So if you're short this stock, I think your warning was, when we went from light blue to dark blue, was to take profits, what have you, and your fail safe measure to cover your stop would have been the breaking of the moving average, and that would have been your spot to cover your short. And if you're looking for a bounce, again, it all comes down to risk reward, but I would rather wait to see what kind of correction consolidation you get after the first bounce. And in this case, deeply oversold stock, pretty good bounce. You bounced from 430 to to almost 440. So you had a $10 bounce in the stock, and it was, relatively good looking candles if you look at that. And then what happens after that? You get a sideways consolidation. So to me, that's a continuation pattern, consolidation pattern. And then what do you get? You get nice. You get a well, in the squeeze indicator down here, it flips to green. So price is contracting. So after contraction, you get expansion. And then you get trend contraction with the yellow candles. So really, all you had to do was draw yourself probably, you know, some kind of contraction pattern, trend lines like we have here in sort of a wedge or a pennant, if you want to call it a pennant. And on the breaking of that was when you got triggered long, or you could have said the flipping from yellow candles to green candles. All right, let me get another example for you. This is Apple, again, a 3-minute chart. Here's the end of the day on Thursday 19th. The last three candles of the day, is it three? The last four candles of the day, we've got extreme price movement. So again, you went from a sort of tight trading range, and all of a sudden price started to expand. So that was a kickoff warning. So you get that kickoff warning by the coloring of the candles. And then Friday morning started off again with further downward pressure. So these color-coded candles continued giving you a signal that you should expect further price declines. So we get that, and then finally you get the average true range catching up to price. We made a bottom a little bit before the dark blue candles start to show up, but again, that's a warning that you're going to get some kind of counter trend move, whether a sideways consolidation, a bounce, or what have you, or a trend, or it can be a trend reversal. This could have been the absolute low, and price could have gone the other way. But in Apple's example, for Friday, price went chopping straight sideways, roughly, and that after you get a big move down and a chop sideways, you should expect further price declines. And of course, what happens is you get another kickoff warning here on this candle, and then away you go. Price really breaks the low, except for this big wick. It breaks below the range, and then boom, you get kickoff move with these candles. And here is an example of you can't always look at these candles and say, okay, well, I've got dark blue, that means that's as low as we're going to go, because that's not those lows you can go. Again, this is a small time frame chart, and you have to realize that bigger money players don't play 3-minute charts. So you can expect sometimes for trends to exceed where you think they're going to end. And what I look for in a lot of cases when you get this kind of move, I look for divergence in the indicators, and I look for lower highs in this histogram. You can see we had our first one's right here, and then the last one is right down here. And again, if you look at sort of that three push pattern, I look for a lot of times is that tops and bottoms are often made on the third push, and here it is, 1, 2, 3. So I did play this bounce, and I got chopped up here at the end of the day because I also was looking for a bigger move in the last half hour of people covering the short and getting squeezed, and that didn't happen. So I'm not sure what that means for Monday, but that could be pretty ominous for Apple that the downtrend is not finished yet. So that's really, I'll do another video on green to red and what have you, and maybe more on yellow next here in a few minutes, but I'm almost at the 10-minute mark, and I'll cut it off there. But that really is what I look for when I am looking at these light blue and dark blue candles, is that the light blue early on a move is a warning, a kickoff move sort of warning, and the dark blue is telling you the trend's at an extreme. And then again, the fail-proof measure of tracking that is when the moving average gets taken out. So here, even though you got a dark blue candle, you could have said, I'm not going to cover if you're a short until I break the moving average, because this is the kind of thing that can happen. You can extend. And then finally, here's where you broke. You broke at 40, 20, 72, which was, roughly another dollar of gains if you were short, if you just held on and waited for that trend line or that moving average to be broken. Okay, so I'll come back to you in just a minute, guys. Hey traders, it's Leaf West again. Before I leave the dark blue, light blue candles, I wanted to look at longer time frame charts because I think that's an important aspect of the color coded candles as well. I have in front of us the Goldman Sachs weekly chart, and less so the price extremes on the bigger time frame charts. That's more of an intraday trading warning or a signal, I think. But the dark blue ones are really important for the weekly and daily charts because they can give you significant trend changes that will happen. If you can get a trend change warning on a weekly chart, that can be a huge advantage for swing trades. Here we have the Goldman Sachs weekly chart, and we have dark blue candles being registered in 2007, early 2007. Again, price sometimes will extend, in a lot of cases will extend beyond where you first start to get those warning signals of a trend getting to an extreme level. Again, uh, by definition, price is very strong. So often, like a pendulum, it'll overswing in one direction. And what I look for is for divergence, right? You look for, here we have the trend strength going from extreme and dropping below. So we got a divergence. We have trend strength weakening, and we have a higher price. So here is a good warning to take profits if you're long, that the trend probably is going to at least do some kind of corrective pattern the other way. And sure enough, the stock dropped from 230 to 170. So that's a huge move. And price bounce again, and what happens here is that we get divergence again. The trend strength doesn't even come close to reaching the extreme, but yet we're making new highs in prices. So again, that's what you kind of look for in a trend reversal setup. And so that was a good warning that, you know what, the odds are that this huge trend higher that we've been having for X number of months or years was going to come to an end. And same thing in early 2000, late 2008, 2000, early 2009. We have an extreme warning of trend being at a point where you're going to get a reversal. And in this case, you actually didn't get a negative or a positive divergence in this case because price is going lower. You actually had the blues being put in at the lows, and we have trend strength, the down strength declining, and price rebounding a bit here, and that was, I guess, this first green candle was your fail safe proof method to get long, and then we had recently another set of blue candles on Goldman Sachs on the weekly, and again, what happened here is you actually didn't make a new low, and you've registered your first green candle for Goldman, much like we did here. So this could be a real kickoff for Goldman going forward. But you can see again, I've talked about this, that when the trend strength is declining, even when you get this first green candle, sometimes all that's going to show you is that you're changing your direction in the trend, but you're going to take a bit of time to get the upside momentum in the new trend direction to kickstart. So back here, when we flip green, we quickly started get a higher trend strength in that positive direction. So now we'll wait and see whether or not it takes 1, 2, 3 weeks before really we start to expand further north. So that again, that's sort of two things: those extreme candles in an intraday sense and extreme candles on a swing trade sense. And there's sort of you have to look at them a little differently. I hope that helps, guys. All right, thanks. Bye.